Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh and Kanishka Sarkar. And over the next 1 hour, we'll get you updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar bright and early this morning. And speaking of stocks then, Kanishka, let's take a look at the Wall Street. It's quite a weak handover as far as Wall Street is concerned, both on a daily and weekly basis.
Thanks, Shreyanshi. Well, we have a weak weekly handover from the US, even as stocks gained on Friday. US stock futures fell Sunday night after Dow posted its worst week since 2023. Dow futures slid 0.4%, S&P 500 futures and Nasdaq were down about 0.5% each. But on Friday, US stocks rallied. The Dow Jones Industrial Average rose 1.6%, the S&P 500 climbed 2.1%, and the Nasdaq advanced 2.6%. It was the best day for 2025 for both S&P 500 and the Nasdaq. However, despite the gains on Friday, the three major averages posted weekly losses. Dow fell 3% for its worst week since March 2023. S&P 500 and Nasdaq dropped over 2%, posting the fourth consecutive losing week.
Alright, then that's the take coming in as far as Wall Street is concerned. That's rather the move that we saw coming in for Wall Street. But let's take a very quick look at oil as well as gold. First, when you take a look at oil prices, a rebound is what you saw coming in, at least on Friday. So rebounded by 1%. Ended the week nearly unchanged because you did have a troublesome week come in as far as oil was concerned. When you take a look at Brent crude futures, the settle was 1% higher. It was the same for WTI as well. But when you take a look at the price levels, then you're looking at $70 a barrel thereabout after falling 1.5%, 1.5% in the previous session. When you take a look at US WTI, $67 a barrel is what you're looking at. 1%, like I mentioned, is the uptick coming in on a daily basis. But when you take a look at both benchmarks, they ended the week a little bit changed. Not much of a change coming in from last Friday. When you take a look at Brent, $70 a barrel, $67 for WTI. But when you take a look at gold prices, then moving on, of course, for oil, you do have a lot of factors coming in as far as the OPEC plus output hike is concerned. That is definitely something that we'll be taking an eye or keeping an eye on and taking a look at. Demand risk, supply hikes, also something that we're considering. But on the flip side, you have gold prices crossing that $3,000 an ounce mark for the first time. You do have US President Donald Trump's tariffs against major trading partners, roiling financial markets, also pushing investors to safe haven assets. Now, safe haven demand is something that you've seen helping gold, and that story is at play with that price level of $3,000 an ounce as far as gold is concerned. So largely that's something to look at as far as gold prices are concerned as well.
Well, lots of cues to watch out for today. In India, February wholesale price index will be out today. In the US, retail sales data will be out. China is also in focus as it will release retail data and industrial production data later in the day. In terms of corporate action and board meetings, IREDA board is to consider fundraising. IRFC and NMDC are to mull interim dividend today. And it's also the last day to buy shares of Castrol India to be eligible for a dividend.
Alright, then let's get you some more news and updates. Then let's get tracking the top headlines this hour. Yemen's Houthis have said that they were ready to meet escalation with escalation then after US strikes targeting the Iran-aligned group over its threat to resume Red Sea shipping attacks triggered a diplomatic backlash from Moscow as well as Tehran. Looks like the strikes, which have killed at least 53 people, might continue for weeks. Are the biggest US military operation in the West Asia since President Donald Trump took office in January. According to the word from the US Defense Secretary, the US will be keeping attacking until Houthis end attacks on shipping as well.
US President Trump may speak to Russian leader Putin over a phone call this week amid US efforts to push for a ceasefire to end the war in Ukraine. But do remember, just last week, Ukraine's Zelensky accused the Kremlin of not wanting to end the war and warned that Moscow wanted to first improve their situation on the battlefield before agreeing to any ceasefire. Among other key comments from other world leaders on the matter include UK Prime Minister Starmer said the yes, but from Russia is not good enough, calling for a stop of the barbaric attacks on Ukraine once and for all.
Moving on, strong words continue to trickle from the US administration under Donald Trump. Officials leading Donald Trump's energy agenda made clear to oil, gas, and mining executives that they have an ally in Washington who intends to make it as easy as possible for them to drill in federal lands and waters. In fact, Interior Secretary Doug Burgum told executives gathered for the world's largest energy conference that the Trump administration does not view climate change as an existential threat. Burgum, in fact, said that he views companies developing resources on federal lands as customers who are contributing to the national balance sheet.
Well, China's State Council unveiled what it called a special action plan to boost domestic consumption, featuring measures including increasing residents' income and establishing a childcare subsidy scheme. The plan comes as levels of consumer demand in China have suffered various setbacks in recent years due to factors such as COVID disruptions and a prolonged property slump, chilling the propensity of households to spend and adding to their deflationary trends.
Alright, then that's the latest coming in, but let's move on, get you some more news and updates. Meanwhile, you do have Treasury Secretary Scott Bessent, who said that the Trump administration is focused on preventing a financial crisis that could be the result of massive government spending over the past few years. Adding to those pressures, then Bessent also noted that there are no guarantees that there won't be a recession. So that's some key commentary coming in. He in fact believes that pullbacks like the one that the market is in right now are benign, and Trump's pro-business policies in fact will be boosting the market and the economy over the long run. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets, take a look at the handover that we have at this point, and it does look like a whole lot of red as far as Asia is concerned. Firstly, when you take a look at Kospi, a downtick of 0.6%, as you can see on your screens, is what you see for Kospi. Even for Nikkei, you do have a tinge of red. That one is also holding on to. So just a 0.1% downtick coming in for Nikkei. ASX 200 as well. 0.5% downtick there as well. And even when you take a look at Hang Seng, that's also the one that's down about 0.6% thereabout. There you have it, as you can see on your screens as well. Even Shanghai is holding on to a tinge of red. At this point, 0.4% downtick coming in for Shanghai. So not a good handover coming in, not a very solid move as far as Nikkei is concerned, but you do have a tinge of red across all of these indices at this point. Nifty, of course, back home shut shop around the 22,400 levels, and currently what is being penciled in is a rather muted start. So in terms of the handover that you have from Asia, not much to look at from that screen other than that downtick that you have. Subdued move is what we're penciling in, at least at this point.
Welcome back to ET Now. You're watching Market Cafe. Well, we're now on to the latest from the IndusInd Bank saga. RBI has directed the board and management to complete remedial actions in Q4 itself. Additionally, RBI has also assured depositors about the financial health of the bank. Anurag? Welcome back to ET Now. You're watching Market Cafe. Well, we're now on to the latest from the IndusInd Bank saga. RBI has directed the board and management to complete remedial actions in Q4 itself. Additionally, RBI has also assured depositors about the financial health of the bank. Anurag Shah is joining in with more details on what the regulator had to say to depositors about the beleaguered IndusInd Bank.
As IndusInd Bank has disclosed discrepancy in derivative book accounting and one-time hit bank would be taking, there are speculations going on around the IndusInd Bank, and now RBI has assured the depositors about the bank's health, and as per RBI, the bank health is satisfactory and depositors should not react about the speculations. The capital adequacy ratio of IndusInd Bank stands at 16.46% as of 31st December 2024. Liquidity coverage ratio is also above the regulatory requirement of 100%, which stands at 113%. Provision coverage ratio is also at 70.20%. RBI has directed bank board and management to complete all the remedial actions in Q4 FY25 and inform and disclose to all the stakeholders. RBI has also asked a bank to engage with the external audit for a comprehensive review. Other than that, the apex accounting body ICA may also step in for the accounting discrepancies. The ICA's Financial Reporting Review Board (FRRB) may step in for the compliance assessment. That what we are picking up from our sources. FRRB checks the adherence to accounting standard, auditing standard, and Companies Act norms. So that will also be related to the discrepancy reported by the IndusInd Bank derivative book.
Well, absolutely. Thanks, Anurag, for getting us all of those important details. Tell you what, we also caught up with Tamal Bandyopadhyay, who's an author and a senior journalist. Let's go across and listen into what he then had to say when it comes to the RBI stance on IndusInd Bank, as well as the latest commentary coming in from the regulator allaying depositors' concerns.
The question which I'm looking for an answer to is this. If indeed RBI was aware of what was happening, and if I'm sure it was, then why did it go for yet another year extension to this particular person who has been heading the show? If you see, look at this, last time the board had approved of 3-year extension and RBI had given it 2 years. That was pretty clear that RBI was not happy, things need to improve. But then second time it came again, and RBI, instead of saying no, it had given yet another year. So why did it do so? Why couldn't it actually convince the board? I mean, instead of saying no straight away, if that would have disrupted the market, it could have convinced the board that, look, this is not done. You guys look for another person. As far as the depositors are concerned, there is nothing to worry about. It's not such a big fraud, scam, whatever you call it, which will destabilize the bank, forget the entire banking system. So depositors' money is pretty safe because on every parameter, the bank is well capitalized, bank's liquidity ratio is pretty good. So nothing to be worried about. Is the investors that to be worried about, but that's not RBI's concern. I mean, you need to check it out before you put in money as an investor.
Well, those were the cues on IndusInd Bank. Next up, Adar Poonawala's Sanofi Properties has sold stakes in Magma General Insurance for 4,500 crore rupees to Patanjali Ayurved and DS Group. Patanjali would be the major shareholder in Magma General Insurance, and with this, Poonawala has exited the insurance business. Anurag Shah filed this report earlier.
Patanjali Ayurveda and DS Group is acquiring a Magma General Insurance Company for 4,500 crores. So, Ada Poonawala's Sanofi Properties would be selling their stake to Patanjali and DS Group. So, there are smaller sellers and smaller buyers also in this transaction. So, sellers are Sanofi Properties, which is a joint venture between Ada Poonawala and Rising Sun Holding. Celicia Developers also selling stake, Keki Mistry, Jaguar Advisory Services, QRG Investment and Holding, they are the sellers. But main stake is sold by Ada Poonawala's Sanofi Property, which held 74%. The buyers are Patanjali, they will be majority shareholder. SR Foundation, RR Foundation, Suruchi Foundation, they are the buyers in the Magma General Insurance Company. So whole deal is subject to regulatory approvals also from CCI, IRDA and other regulators. This Magma General Insurance has seen 26% CAGR premium growth in last 5 years, and new promoters like Patanjali would be able to infuse capital for the growth, and their distribution network, the rural distribution network, would be helpful for Magma General Insurance.
All right, thanks Anurag for getting us all of those important details. Tell you what, let's keep it going with, let's get you some commentary, in fact, coming in from an exclusive conversation. In fact, while stressing on payment, credit and wealth, Paytm CEO Vijay Shekhar Sharma talks about the payment segment, said that this is the segment that's the one where he sees T20 kind of rapid growth. In fact, he's talked about cricket terminologies. Let's go across and listen in to what he had to say, not just about cricket terminologies, but also about the company's path to profitability.
Payment is definitely where our T20 growth is because of two reasons. Number one, we got resetted to a bottom. So we already had a market and we got reduced. Our payment revenues got probably reduced by 25-30%. So we are talking about there is where when we are hitting good market share and opportunity, whether it is, and remember the payment revenue does not only come from consumer side, it also comes from merchant side, because merchant side, merchants MDR, fees, soundbox subscription, all those things are also key KPI. So for us, the T20 is the payments business. I also want to say that we fundamentally believe that because of MDR coming soon, hoping they're coming soon, payment itself will be profitable by design itself. So payment inherently is our primary scale and let's say break-even profit driver. Then comes the long haul, which will always be there and will be meticulously big, is called credit distribution business, where we partner with different NBFCs and banks, and our merchants and consumers get credit. So that is our test match, or actually rather one day I would say, because it is a good match and it is a good joy, but in a one day you get the result. So credit gets that. Then comes our wealth business, where you talk about stock brokerage, like I told you, or mutual fund distribution. That I think is a test match. It'll come in longer haul, but it'll be a large profit pool. So payment, credit, and wealth is our primary game. I've even made a public statement in our earning that we in Q4 this year, we will deliver profit, and going forward, we are focused only on delivering a PAT growing company. The key needle mover will be when MDR walks in. At the same point in time, internally, because of efficacies, #AI, efficiency increase, so we were able to optimize dramatic lot. So we are at a very visible distance, or not very far, for it to start making profit. What we are doing is that our till yesterday's customers are actually profitable. It is the team or the cost that we have invested in the market to gain today's market share, or today incremental get new customer, which is what we want to also serve with the cost of our own self. So I call it market expansion investments. We are saying that payment business will be able to take care of its market expansion investments. And right now we believe, like you see it across nook and corner of the country, the opportunity is huge. We are talking about 100 million businesses that can take our payment business, and we are talking about only 10-12 million of them are subscription paying. I'm talking about the higher quality of the merchants, and I believe that number is anything from 50 million to 100 million, some number between that. So there is a huge market.
Well, those are some interesting insights from Vijay Shekhar Sharma about the cricket analogy. Next up is Debashish Panda concludes his 3-year tenure as the chairperson of IRDAI. We take a look at his major hits and misses during his tenure. Anurag Shah joins in. He also tells us who are the key contenders for the post of IRDAI chair and what are the challenges that lie ahead of them.
IRDA chairman Debashish Panda completes 3 years of his tenure, and he is demitted the office. His 3 years were eventful. A lot of action insurance industry has seen. One of the reason because before he took charge, the post was vacant for 11 months. So 30% single limit expenses of management limit was brought in, which gave freedom to insurance companies to give the commission in their various segments. Previous to that, there was fixed limit for motor insurance, for health insurance, for property insurance, but Mr. Panda brought the fixed limit. Other than that, half a dozen new licenses were given. In the last board meeting, which happened yesterday also, first license to the private reinsurance company is also given. FDI push, Mr. Panda proposed for 100% FDI to attract the global investment, which was announced in the recent budget. Bima Trinity is proposed by Debashish Panda. Bima Trinity includes Bima Sugam, Bima Vistar, and Bima Vahak for the deeper insurance penetration. So Bima Sugam is a Amazon of insurance, UPI movement for insurance, for buying an insurance policy, for serving of insurance policy. Company has been set up, but work is going on. Bima Sugam platform is not yet launched, but it will be a game changer for insurance industry when it will be launched. Senior citizen protection. So for senior citizen, premium hike been capped at 10%. free look period got increased to 30 days, where if you are not agreeing with the terms and condition, you can return the policy. Surrender value rules also brought in, which will give a more value to the policy holder. Faster approval. A new approach was adopted from use and file. So any company can start selling a product and later on they can take approval, and insurance for all vision was also started. But few misses also. So Bima Sugam concept started in 2022 and we are in 25. So after 2.5 years also, Bima Sugam is yet to launch. Other than that, the aggressive targets given to the insurance industry, for non-life insurance industry, by 2027, 11 lakh crore of target was given, but industry is way behind that, and insurance penetration also got decreased. So going ahead, what are the challenges for the new chairman for the insurance industry? So Bima Trinity is a new challenge and in a way new development, where Bima Sugam, Bima Vistar and Bima Vahak will be launched. Other than that, risk-based solvency, adoption of IFRS framework, transition of IFRS accounting, these are the way ahead for the insurance industry. So after Mr. Panda, who will be at the helm at IRDA? Although there can be a surprise, but as per our sources, there are 3 strong contenders. So Sriram, the first one is Sriram Taranikanti, is presently director at Lal Bahadur Shastri National Academy of Administration, IS officer. Previously, he was executive director at IRDA from 2011 to 2016. He studied in IIT Madras. Girdhar Armane, former defense secretary, former road transport and highway secretary. He also was with IRDA on deputation for 3 years as executive director in charge of inspection. Studied MTech from IIT Madras. Ajay Seth, current Revenue Secretary and Department of Economic Affairs Secretary. His superannuation is due on 30th of June. So as per our sources, he is also strong contender for next IRDA chief.
All right, thanks Anurag for that update coming in. So there you go, 3 strong contenders as far as the post of IRDA chief is concerned. But time now to slip into a very short break. We'll see you on the other side with more news and updates. Welcome back. Thank you so much for staying tuned in. Still watching Market Cafe on ET Now. Tell you what, let's get you some important commentary then. In fact, top global voices remain bullish when it comes to India. Chris Wood calls India the best structural story. You do also have Jim Walker, who also talks about policy stability, making it a standout time to double down. And Florian Neto, who also sees India's fiscal path as strong but finds Smith's pricey. Meanwhile, Vivek Paul also bets big on India's AI pivot. Let's go across and listen in to what the experts had to say.
Given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the near. Well, they have been outperforming year to date, and they can do so more, I would say, are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings. And although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious.
The state of policy generally, so monetary policy, fiscal policy, and exchange rate policy. India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability. You know, I've said to clients this week that this is the time to absolutely double down on the long on India, go much, much longer. And although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off from here. And those valuations will be very quickly supported by corporate earnings and by economic growth.
We do feel that the valuations that we are seeing on mid-cap is still a bit expensive compared to what we are seeing from an earning revision ratio on the market. Of course, you can selectively find some stocks, but in general, we do feel that now on the large cap, most of the resit on the valuation has been happening already. The Chinese rally is a tactical rally for now, in our view, but it can become more sustainable. So the question is on the leadership. And we do feel okay having an overweight on India and an overweight on China today in our portfolio. The overweight on China is not sustainable yet, and earnings there is not good enough yet. Okay. So there is good prospect for Chinese companies to deliver more because the business environment is evolving.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future.
That's correct. Global voices remain bullish on India. However, a weaker dollar and a market peak is in store for US, according to them. Chris Wood says Trump doesn't want a strong US dollar and its dominance may soon fade. Jim Walker sees a 10% dollar correction ahead. Florian NATO expects money to exit US equities as markets top out. Meanwhile, Vivek Paul warns of rising long-term yields.
Base case for now is that the same thing will happen as happened in 2016. That is that the dollar peaked when Donald Trump entered the White House. That's what happened in the first Trump administration. That's my base case today. It's also a reality that Donald Trump doesn't want a strong dollar. So that's my base case. So I'm hoping that the tariffs do not prove to be as big a deal as currently threatened. But if I'm wrong on that, the tariffs in the short term will be inflationary. In the longer term, they'll be negative for growth.
I mean, that's exactly the kind of range that I would be looking at when we look at past recessions in the US and slowdowns in the US. 10 to 15% on the dollar as a correction is not at all unusual. And that's really been our forecast, unfortunately, too long, that there was going to be a slowdown in the US and there would be a significant dollar correction before that slowdown really materializes. But I think, we could easily see a 10% correction and then a bit more in the US dollar over the course of the next 9 months or so.
You may see that the euro has been moving 5% already, appreciating. The yen as well have been moving 10% over the last 3 months. So the dollar has been depreciating in trade weighting terms, but not versus some specific EM currencies. Second point, we are strong believer, and it's part of our outlook for this year, that the US performance, the way the design of it was not sustainable. It was too concentrated, lower breadth, and indeed those stocks, those Max 7 stocks, deserve to perform well because they have been having strong guidance, strong earnings, high bar, and they have been matching the bar or exceeding the bar. But we do believe now that the S&P will perform less than other markets because S&P the performance should broaden to other stocks and other sectors.
For the long end of the yield curve in the United States, we'd be a little bit more cautious on the long end of the yield curve than we started the year.
Can you break long end for our viewers? What does long end mean?
Sure. So if you're thinking about sort of 10-year and beyond maturities, we would see, because we've seen a material sort of decline in yields more recently, we think that when we get towards the end of the year and beyond, we will see yields at the long end having some upward pressure. Because if you take into account all of the story that we're talking about, yes, there's more growth concerns in the near run in the US than there were at the start of the year. But at the same time, the inflationary pressure and the backdrop that we've been talking about isn't going to go away anytime soon.
All right, then that's some key commentary coming in bright and early this morning to start your day with. But speaking of starting your day, right, let's get you a list of stocks that you should be keeping on your radar bright and early this morning. In fact, Snehi is standing by with just that list.
Well, yes, morning. Lots of stocks to watch out for in today's trade. First up, a basket of pharma stocks will be in focus on the back of some US FDA action coming in. First up, let's talk about Alchem Labs. That will be in focus because because the US FDA had conducted a bio-research monitoring inspection at the company's Taloja plant and no Form 483 observations were issued after that. Zydus Life Sciences also, US FDA had conducted a surveillance inspection at its Ankleshwar unit in Gujarat. The inspection ended with nil observations. And also, second news flow for Zydus Life Sciences, they've received the final approval from US FDA for their eluxidoline tablets, which is used for to treat loose motions. Shilpa Medicare, another pharma stock in focus, US FDA conducted an inspection at its Raichur unit. Once again, zero observations. So positive news flow coming in for all of these three pharma names. Moving sectors, let's talk about Brigade Enterprises. The stock will be in focus. They've launched 2 new projects in Bangalore with a total revenue potential of 3,080 crores. Positive news flow for KC International as well. They've won orders worth 1,267 crores in the T&D cables and wires segment. SpiceJet promoter Ajay Singh has sold 1.15 crore shares worth 52 crores. So the stock could be under pressure today. Muthoot, positive news flow coming in. The company has announced its landmark milestone of crossing 1 lakh crore in gold loans AUM. So watch out for all of these stocks today.
Thank you, Snehi, for those stocks that will be in highlight today. With that, it's a wrap on this edition of Market Cafe. Stay tuned to ET Now for more updates and news on the other side.
There's no particular. If you like this video, then like, share and subscribe to ET Now.